October 9th, 2025. Wall Street wakes to chaos, not from an earnings report or central bank move, but a Supreme Court decision. The court, in a 6-3 ruling, strikes down the broad-based tariffs that had defined global trade for years. Panic erupts. The Dow plunges over 1,200 points in seconds. The VIX spikes to pandemic-era highs. Automated trading algorithms dump stocks of companies built on protectionist policies. The market's foundation is shattered. Global supply chains, painstakingly rebuilt around tariffs, are instantly obsolete. London, Frankfurt, Tokyo, Shanghai, all follow New York into a sea of red. The US dollar tumbles, its stability in question. Currencies and markets worldwide convulse. This isn't a correction. It's a fundamental repricing of global reality. Industries that invested billions on the assumption tariffs were permanent now face a void of uncertainty. The Supreme Court hasn't just removed a tax, it's vaporized the logic underpinning the global economy. The chaos on trading floors is just the first sign of a deeper disruption. The world's economic map has been violently redrawn. The question on every mind: what happens now? Tariffs, taxes on imports, are among the oldest economic tools designed to protect domestic industries and jobs. The tariffs struck down were the most sweeping in generations, justified as national security measures, but expanded to cover everything from steel to electronics. Their goal: rebalance trade, revive US manufacturing, and pressure foreign economies. The result? Short-term gains for some industries, but higher costs for businesses reliant on imports, fueling inflation. Retaliation was swift. US exporters, especially farmers, lost access to key markets as other countries imposed their own tariffs. Studies showed the net effect negligible or negative for US GDP. Jobs created in protected sectors were offset by losses elsewhere. Global supply chains, optimized for efficiency, were thrown into chaos. Companies faced a stark choice: absorb costs, pass them to consumers, or overhaul supply chains at great expense. The tariffs' legacy was a tangled web of winners, losers, and economic distortion. The legal battle began years before, led by a coalition of businesses claiming existential harm from the tariffs. Their argument: the president had overreached, imposing sweeping taxes without Congress's consent, stretching national security beyond reason. Section 232 of the Trade Expansion Act was meant for narrow, defense-related cases, not broad economic protectionism. The government countered: national security and economic security are intertwined, and the president needs discretion. Lower courts sided with the executive, but a divided appeals court set the stage for the Supreme Court showdown. The High Court's decision to hear the case signaled the stakes, the very limits of executive power in trade policy. The outcome would reshape the balance between Congress and the president. The Supreme Court's majority opinion, authored by the Chief Justice, reasserted Congress's authority over economic policy. The court ruled the executive's use of national security as justification for broad tariffs was an unconstitutional overreach. The opinion drew a line: real security threats justify action, but economic protectionism does not. The decision returned trade policy power to Congress, instantly invalidating trillions in tariffs. The dissent warned this would tie the president's hands in a complex world, but the majority held firm. Legally, it's a landmark curb on executive power. Economically, it created a sudden policy vacuum. Businesses and markets were left to navigate the abrupt collapse of a deeply entrenched system. The ruling didn't create a new order, it erased the old one overnight. The market's reaction was swift and brutal. The Dow's plunge was just the start. Tech stocks, industrials, and even former tariff winners like US Steel collapsed as investors fled uncertainty. Automated trading overwhelmed exchanges, amplifying the panic. The US dollar, usually a safe haven, weakened as faith in American policy wavered. Global currencies surged. The euro, yen, and pound all gained ground. Multinationals faced new headaches. A weaker dollar made exports cheaper, but raised costs abroad. Investors rushed to US Treasuries, driving yields to historic lows, a clear sign of recession fears. The market punished everyone, not just losers, as the rules of global trade vanished overnight. The chaos wasn't about free trade or protectionism. It was about the violent demolition of the status quo. With no clear blueprint, the world's financial system was left reeling. The only certainty, more turbulence ahead. As panic faded, a new reality emerged. Domestic industries shielded by tariffs, steel, aluminum, faced a flood of cheap imports and looming layoffs. Their stocks kept falling, exposing the risks of relying on government protection. Meanwhile, industries burdened by tariffs, autos, construction, anticipated lower costs, but gains were muted by fears of recession. Retailers, long squeezed by tariffs on imports, saw hope for lower prices and higher sales, but consumer demand remained uncertain. Agriculture was whipsawed. Farmers, hurt by retaliatory tariffs, could theoretically regain lost markets, but years of damage and new competitors made recovery slow. The path forward was uneven. Some sectors glimpsed opportunity, others braced for pain. The market's verdict was clear. No one was immune to the shock. Winners and losers were reshuffled, but the dust had yet to settle. The only constant uncertainty, the economy's new shape, would take years to reveal itself. The world's reaction was mixed: relief, anxiety, and recalibration. In Europe, officials welcomed the end of tariffs, but warned of costly supply chain unwinding. German and French exporters cheered, but knew recovery would be slow. Japan hailed a victory for rules-based trade. Its exporters rallied. China was cautious. Removal of tariffs brought opportunity, but years of strategic shifts couldn't be undone overnight. Emerging markets like Vietnam and Mexico, which had gained from tariff-driven investment, now faced new risks as the global landscape shifted again. The decision didn't restore the old order. It triggered a new phase of uncertainty. Alliances, trade routes, and investments were all in flux. The world had adapted to a protectionist America. Now it had to adapt again. The only consensus: the rules had changed and the future was unpredictable. The long-term impact will be profound. U.S. industries propped up by tariffs face painful restructuring and job losses, especially in the Rust Belt. Politically, the fallout will be fierce as policymakers scramble to support displaced workers. Yet this upheaval could spark a more dynamic, competitive economy, reallocating resources to globally competitive sectors. Consumers will benefit from lower prices, while exporters gain from dismantled trade barriers. Globally, companies must rethink supply chains, return to low-cost producers, or stick with resilient regional models. The answer will be a hybrid, but uncertainty will dampen investment for now. America's reputation as a reliable trade partner is at stake. The ruling signals robust checks and balances, but also the risk of sudden policy swings. Every future deal will factor in this new volatility. The world's economic order is being rewritten in real time. The Supreme Court's decision was an economic earthquake, not just a legal ruling. Tariffs vanished overnight, upending business strategies and global alliances. Markets plunged, sectors scrambled, and the world reeled from the sudden loss of predictability. The ruling reasserted congressional power, but left a vacuum where certainty once stood. The transition will be turbulent. Some will thrive, others will struggle. The next chapter of global trade is unwritten, its outcome uncertain. The question remains: will this disruption lead to a more integrated, prosperous world, or unleash a new era of volatility and economic nationalism?